What's good, family? It's your man Harrison back again with another video. In today's video, I'm going to be sharing my #1 tip in Forex. Guys, you don't want to miss this. Alright guys, so before we even get moving in this video right now, I want you guys to go ahead and literally smash that thumbs up button. I don't care whether you have to drop some weights on that like button. I don't care whether you're gonna, do a people's elbow on that like button. All I want is 400 likes in this video. I'm showing my #1 tip, the #1 tip that literally pivoted my whole trading journey. And don't forget to subscribe to the channel. You all know already that the subscriber goal for this year is 50,000 subscribers, and I know we can get there. So family, liquidity gang, I need you to watch the whole video to the end, so that way YouTube literally pushes out this video to the masses. This is going to change the game for folks, I know for sure. So we're going to be breaking this down. I'm going to try and take it nice and slow to really break this down for you. So let's get straight into it now. So my #1 tip in Forex is to always trade towards the money. Always trade towards the money. I can't give you anything else. This is my #1 tip. If somebody was to ask me, yo H, what's the #1 tip? I would say, look, make sure you're always trading towards some kind of money. Why? Because price is drawn towards the money. And so if price is drawn towards the money and you're trading towards the money, you're going to win most of your trades. So this was one of the trades that I was in. I believe this was on Thursday. Can't remember. I think Thursday or Tuesday, one of those days. Price is making higher highs and high lows. And then look what happens. It trades higher and then pulls back down to this last down close candle right here. This is where I catch my entry for a buy. Now I'm in the trade, and these trades were on Instagram. If you follow me on Instagram at @harrisonuwah, you're going to see that I was in these trades. And what I'm going to do after this is I'm going to create a little short video with this exact same thing, but literally in bite size, 30 seconds with my positions as well. So I jumped in for a buy here at the last down close candle. You know what's happening here. Then draw down in this candlestick. So when they come back down, they come back down to mitigate their drawdown positions to go higher. Another thing that I'm going to point out is this: when price started trading higher, they created equal highs. So equal highs is like a retail concept whereby when price trades to the exact same area twice, so you can see traded up into this area, traded up into this area again, this is known as an equal high or a double top. So once you get a double top, what retail traders are looking for is that they want a rejection candle and then they jump in for sales. But where are they putting their stop losses? They are putting their stop losses in this area up here, normally about 10 to 30 pips above. This is where they're putting their stop loss. So in other words, there's money here, right? There's money here. And also, who else is going to be involved up here? There's going to be buy stops up here. So anyone who's doing breakout buying, so if it breaks out of this zone, because this is like a zone to them, if it breaks out of this zone, I'm going to buy. Those are breakout buys. They get activated into the trade for buy, but their stop loss gets taken out when it trades back down into this level here. So in other words, there's tons of money up here. And if you know price is drawn towards the money, you're going to trade towards the money. So you're going to buy towards the money. You're going to hold a position that as long as it keeps running out the money. So what else do we have here? So I've explained to you that retail stop losses up here. Okay, stop losses in this area down here. Buy stops get activated as well. Okay, but when you look to the left, what else do you see? You see consolidation. So consolidation is basically an accumulation of orders. They're accumulating orders on the bottom side and they're accumulating orders on the top side. And so what retail traders are trained to do or taught to do is whenever it gets to the bottom of consolidation, you should buy, which they do. Whenever it gets to the bottom of consolidation, they should buy. You even got like, equal lows here as well. When it gets to the top of consolidation, you should sell, right? So there's an accumulation of orders. And so you have to think about it, where they're putting their stop losses. They're putting their stop losses beneath this area down here and above this area up here. So what's going to happen? They would run out one side and they should come back around at the other side too. There's also going to be buy stops up here, so the breakout buys, and sell stops for the breakout sellers. So what happens again? Once they run the bottom side, they take out the early buyers, yeah, anyone who's buying early, because they get stopped out, but they never took out the top side. So this is still open at the moment. This is still open. So when we look to the left, there's also a drawn price to the left, which is above this consolidation area. Everything's telling us that the money's to the top side, so we're going to continue to hold. Also, I like this up close candle. This was going to be my target zone over here. This was going to be my target zone where I was going to knock off 80% of the trade. So let's keep it moving now. So I did actually add a second position. I didn't have it. I didn't put it on this chart, but my second position came in down here. But I'm going to explain that in a second. After produce is a high low and they start pushing again, guess what else they do? They create another set of equal highs. Guys, same story, same thing. They get a piece of the pie this time They get a piece of the pie, they get the confirmation candle, which is this rejection candle. They jump in down here, they get a piece of the pie, they're celebrating, they're moving their stop losses, whatnot. They're doing all kinds of celebration. But guess what? They get taken out again. As you can see, they get taken out. They get taken out again. The draw on price was to the upside. So trading towards the money. There was equal highs. So you knew when you saw this, you just hold. Equal highs, you saw that, you hold. And let me just quickly point this out to you as well, because I know you might not be able to see this, but if I just draw up a line here, look what happens. This is the top of that consolidation range. When they came up to that range, they did not run out the liquidity. Instead, they traded lower, they came up again to tease them, they did not run out the liquidity. So when they keep doing this, when they come up to a place where there's meant to be liquidity above it and they don't run it out, what do? They generate more liquidity, which basically means more stop losses are placed above this area here because they think this is a very strong zone. All these people selling, they're putting a stop loss above this area up here. There's tons of liquidity in this area, and so this is now becoming a very, very highly likely area. For both positions, I traded them to this up close candle. I took 80% off of this up close candle, 80% off. I let 20% of the trades ride because just to take out this high, the final high that I just wanted it to take out. And I moved my stop loss to this level over here. Now let's talk about the sell. Once again, the tip is still to trade towards the money, and I'm going to explain to you guys exactly why I jumped into the sell and exactly where my targets were. So first of all, we are taking the money on this side above consolidation. We're taking the money above these equal highs, and we are tapped into the up close candle where they were mitigating their position. That's number one. So I was completely happy with that. So far, I'm happy with this trade. Price traded lower, create this high over here. Yeah, created this high over here. And then look what happened. They started to consolidate above this high. Okay, started to consolidate above this high. Yeah, and just bearing in mind, I did want to get the sell, but I didn't want to get it this early because I wanted them to run out the money above that high, that previous high, roughly about 50. So, but then they started consolidating above this high. You might have missed it, but they started to consolidate above the high. So this is where smart money are jumping and getting involved. So people who still think that price is going to go higher, they're looking to buy from here. They're looking to buy. Yeah, they're still trying to buy, but smart money is selling. This is that exchange happening right now. They're getting ready to go short. They are loading up on their short positions while you are loading up on your buy positions. This is where I jump in with a sell and then I target the money. But you guys are then asking, where is the money? The money is down here. Yeah, the money is down here. This is where the money is, this low. And now let's break it down. What do you see? You see a trend line over here. This is a trend line. Yeah, this is a trend line. Look, I still know how to draw them up. I don't use them, but this is a trend line. What's happening at a trend line? Every single time it comes to tap this trend line, so I know I probably didn't draw it perfect. Every single time they tap the trend line, people are loading up on buys. So this low has stop losses beneath the previous low. This low has stop losses beneath the previous low, and so on and so forth. So every single time they come up and tap into this trend line, they're loading up on buys. So where's the stop loss? In this area down here. All in this area down here. So in other words, what happens is whenever you see a trend line, where something is respecting a trend line, right, there is a liquidity pool. In other words, there's just a pool of stop losses down here that they just want to dive into, just like a swimming pool on a hot day. The heat is just way too much. You just want to jump in the pool, and this is exactly what it is. It's a liquidity pool, tons of stop losses in this area. And so if they run out these lows, they run out all the stop losses. Simples. So this was my target down here. Yeah, liquidity pool down here. There's lots of money down here. So let me quickly put the little money sign. Okay, boom. Lots of money in this level down here, and obviously there's money beneath this low. So this is low here was going to be a drawn price. Price started breaking lower, but they came close to this level down here. Guess what? This is relative equal lows. Yes, they dismissed it by a pip or two. It doesn't matter. That's relative equal lows. It's the exact same story as these equal highs. There's going to be stop losses beneath this area down here from retail traders and anyone who trades equal lows and stuff like that. There's also going to be sell stops down here. And so what happens is this, they get a piece of the pie. So those who are buying, okay, from the equal lows, ultimately they get run out. As you can see, they get run out. Yeah, and then the sell stop people who jumped in, look at that, they jumped in, they got activated from this level down here, then price went against them, they got run out too. But ultimately, look what happened, family. Price then traded down into this level. Just so you guys know, look, when I go to the left, there was a mad wick, so I'm going to quickly go and put the replay function on so it doesn't mess up my stuff. Alright, so yeah, I just put the little replay function on just so it doesn't mess up the rest of my chart when I'm moving left and right. But check this out. So what I wanted to show you was this. They come close, they jump into this liquidity pool, as you can see. They jumped into this area down here, which is taking out all of these stop losses from these buyers, okay? But ultimately, look what they did. They didn't run the low. If I bring up a little line here, so if I just do this, where's my line up? Down here. As you can see, this line, I've just added a line now, they did not run out the low. What did they do? They created equal lows again. Once again, retail traders going to be jumping in, stop losses beneath this low over here, jumping in, they get a piece of the pie, but ultimately, this is what happens. I'm going to go ahead and cut off this replay mode so you can see what actually happened. I just had to change the screen so you can actually see what happened, because obviously, look, madness. Madness happened. So this is why it's like this, basically. So let me quickly expand this up a little bit and bring this down, as you can see. So this is what I scored off 80% of the trade. Yeah, 80% of the trade when it got to this level down here, and then I let the rest ride. Okay, I let the rest ride. I didn't wait for them to, come and blast through this. I scored off the moment it got here. This is where I scored off 80%. 80% of the trade, and then boom, just took them out like crazy, did an absolute madness. Obviously, it was still in my favor. I let the rest of the 20% ride, and I closed it at 80. Right, where's 80? Where's 80? There it is, boom, 80. Let me quickly bring this back now real quick. I'm gonna quickly throw it on the replay mode again, just so the chart looks clean. So guys, that's what I wanted to show you guys. Like I said, my number one tip is to always trade towards the money, right? No matter where you're trading to, no matter what you feel like, no matter what kind of retail ideas or concepts you've been taught, always trade towards the money, because price is drawn towards the money. That's what I wanted to show you guys. I wanted to give you guys my number one tip. Hopefully you can take this tip and run with it. So like I say in my other videos, these are all my opinions, family, right? And so you guys can go ahead and backtest this with your demo accounts. So family, that is exactly what I wanted to show you guys. I wanted to give you guys my number one tip and show you guys how I'm trading that number one tip. And before I forget, family, the special word for the 4th mentorship giveaway is well, it's not a word actually, it's actually a bunch of letters, but it's TTTM, so triple TM. TTTM, which stands for trade towards the money. So the way to get involved into that is to drop a positive comment down below, leave your Instagram handle, and also go into Instagram and DM me the special word TTTM. That way you get a chance to win my mentorship giveaway for 1 month. Anyway, family, thank you guys for watching the video. If you took value from this, definitely subscribe to the channel. You guys know it's time to get this channel to 50k, man. There's no more time wasting. This channel needs to go to 50k. This channel needs to get to 50k subscribers. I'm going to be uploading more videos as well. My aim is to upload more videos. Also, guys, I like my likes. So let's try and smash 400 likes. Let's go.